All right. On behalf of FX Trade and TradeView Investments, I welcome you all to technical trading webinar, Trading Candlesticks. I thank you for all of you for taking time out from your otherwise busy timeline and for attending to this webinar. This is the second part of my webinar series which I am discussing with you. The first part was on market structure and dynamics last month. I thank you all for your spontaneous participation in the webinar and overwhelming positive responses. I again thank you all for sending tremendous feedback emails generating from that webinar. For newcomers into this webinar, my name is Partha Banerjee. I'm a full-time trader trading for a living. My purpose here is to help fellow traders to progress into their next level of market understanding so that they can also start enjoying the benefits of trading. Those of you who don't know me, my trading experience comes from having completed Diploma of Technical Analysis. I'm a certified financial technician, completing the general advice on derivatives. Started the Diploma of Financial Planning, completed specialized techniques in technical analysis, FIN 231 technical analysis, personal advice on foreign exchange, Tier 1 advisor compliance solution in specialist knowledge securities. I'm an engineer having got project management professional degree from Project Management Institute USA and certificate of global business leadership from U21 Global Singapore and Harvard BL. Way back, I started my consultancy career after completing mysap.com application from SAP AG Germany. My advantage is my 15,000 hours of screen time experience, coaching and mentoring 700 plus budding traders, delivering 300 plus 1-day, 2-day, 3-day seminars and boot camps. This webinar will be approximately for 45 minutes duration. You may post your question anytime in your query section or at the end of each slide or park your questions till the back end of the presentation. Please raise your hand if you do not understand what I said. I'll be more than happy to explain it further. Please let me know if I speak too fast or too slow or if I miss something which you want me to repeat. Let's get started with the general advice risk warning. Trading leveraged products carries significant risk and is not suitable for all investors. Please ensure that you fully understand the risk involved before entering into trades. You could lose substantially more than your initial deposit. We recommend that you seek independent advice and ensure you fully understand all risks involved before trading. This presentation is provided for information purposes only and should not be regarded as financial product advice. The information does not take into account your specific objectives, financial situations, or needs. Therefore, you should consider the information in light of your specific objectives, financial situation, or needs before making any trading or investment decision. TradeView Investments ABN number in front of you is a corporate authorized representative of International Capital Market authorized representative number in front of you. Okay. Those of you who probably know me from previous webinars, I generally start every webinar from the foundation level, from the basic level, and then I build onto it. In the middle portion, you will find something probably you have not heard of, and then towards the end, I will show you something which will I hope will add tremendous value to your understanding. By saying that, today I will cover the history of candlesticks, Representation of a candlestick. I'll show you how to represent a candlestick. These two are most important. Correct identification of bullish and bearish candlesticks. You probably heard of there are many candlestick sites or many forum in which candlesticks are discussed, but the correctness of bullish and bearish candlesticks with the context. The most important part is context. I will discuss it. Then I'll touch upon candlestick pattern formations, how the patterns can be recognized and how you can have your own pattern recognition system. I'll help you on that. I'll identify with you the reversals through candlesticks. The candlesticks are extremely powerful in identifying the reversals, and also talk about continuation candlesticks, because reversal is not only the one, we have continuation also. This is one important thing in candlesticks, that you can identify the support and resistance through candlesticks. I will help you to understand that. And also to have the profit targets from candlesticks. Many of us probably know that candlesticks are used for only identification. We cannot target the profit, but I'll show you how. And this is also important, the challenges in candlesticks trading. If you get started with candlestick trading, you need to know what not to do when. I will talk about that. And I will conclude at the end what I have discussed so far, and I will declare the winner of the last competition. Okay, let's go through a quick audience participation. Please tell me who trades professionally. I'll give you 10 seconds. Okay, Justin is head fund manager. What you can do while you are typing your response to my question, you can send to me instead of sending it to all participants. There is a drop down box in which you can select whom you are selecting for the send to. So please send me as the presenter, and or you can select host and presenter. I would appreciate if you do not send to all participants, because most probably they will confuse themselves. Okay, brilliant. Thank you for your responses. Who trades part-time and works full-time? Again, I'll give you 10 seconds. I need response from all of you. Mary, Pan, Adinda, FX Boki, Raymond, Edwin, Eric, FX Trade, Justinus, Mark, Pooja. Thank you. Good, very good response. Very good. So many of you trades part-time and work full-time. Pan is saying, but in front of screen all day. Okay, that's good. All right. Retail trader, DJ is retail trader. Raymond is part-time. That's good. Very good. Very good. Thank you for your response. And the third one is, who is not ready to trade yet? Maybe psychologically, maybe mentally, maybe physically, maybe financially, maybe knowledge-wise. Because knowledge, I always say, is power. But the application of knowledge is powerful. That's why we are doing this at webinar, and you are attending this webinar. Okay, that's all right. Amateur traders is all right. It's definitely you. That's okay. You're honest. Yeah, that's all right. That's good. Okay, this is the most important question. Who wants to learn trade, or who wants to learn to trade like the professionals? Please be honest with you and response. Yep, all of you? Very good, yeah, 90%, yeah, of course, yes, Pan, here, DZ, Ramon, yeah, same answer, yeah, absolutely. Brilliant, very good, thank you very much. So 90% of the participants wants to learn to trade like the pro. Now the last question, who subscribes to a newsletter service or takes advice on their trades? Yep, some of you. Yep, not me anymore. DZ, right? That's good. Okay, very good. Thank you. Thanks a ton for your participation. Brilliant. Appreciate. Okay. So what we'll do after getting a response, we'll start with the history of candlesticks quickly. So one school of thought that candlestick charts was developed by Munehisa Homa, also known as Sokyo Homa, during 1725 to 1803. He was a rice merchant who traded in Dojima rice market at Osaka. So during 1755, this is important. In his book in Market Psychology, he wrote, the psychological aspect of the market is critical to trading success, and that the traders' emotions have a significant influence on prices. I always say we need to be controlling our emotions. We need to be disciplined and control on our greed and fear, because I define price as plots of human emotions. So back in 1755, the father of candlesticks wrote probably the same thing in his Market Psychology book. Munehisa is often referred to as father of Japanese candlestick charting. So if you read a little bit of him, then probably you'll come to know he made 100 trades out of candlesticks without a single losing trade. 100. Consecutive 100, yeah? That's a great success. The other school believes that candlestick charts were developed during the Meiji era in Japan. But I think Munehisa is rightly considered as father of Japanese candlestick charting. Alright, that's the history. Now I'll represent the candlesticks in front of you with all its parts. Candlestick is known for its body. What is a body? If you are trading bar charts, you probably know OHLC, open, high, low, close. So similarly, candlestick, the body is being represented between the portion of open and close. Okay, so open, and the difference between open and close is the body. Is this webinar recorded? Yes, it is recorded. Okay. Thank you for that. All right, so the open and close is the body, and then we have the high as usual and the low. The distance between the high and the open or close, depending on is it a bearish candle or a bullish candle, it is defined as wick. Similarly, the low and the open or close is also defined as wick. So this wick, this high and the low, the wicks are extremely important. They are also known as shadows, and they are equally important as the body. Okay, good. Now let me help you to identify the correct bullish candlesticks. It is the close price is higher than the open price. If the close is near to the candle high, it is considered to be a strong bullish candlesticks. Some of the examples of bullish candlesticks, don't worry, I'll show you from ample examples from past and live situation now. Hammer and bullish Marubazu. Marubazu is a candlestick. It's one of my favorite. Bullish Marubazu is this candlestick, last but one, in which there is no wick at the top. They are extremely strong. They can be very strong. So this is a bullish Marubazu here. Similarly, the bearish candlesticks is when the close price is lower than the open price. So if the close price is near the candle low, it is considered to be a strong bearish candlestick. Some of the examples of bearish candlestick, I'll show you many in a minute. Inverted hammer and then bearish Marubazu. So the first candle in front of you, I generally prefer to color the body bearish for red and bullish for green. You can change, you can select any color. Many people prefer black and white and so on and so forth. So this first candle in front of you is a bearish Marubazu because it is not having a wick or a shadow at the end, or a very negligible one. Yep. So this is a bearish Maru Bazu. All right. Now, bullish candlestick pattern formation. I'll define now some of them, and I will help you to define yourself all of them. Okay. So I'll define for you some of them. Single candlestick, hammer. Hammer is a type of candlesticks, and okay, let me. No, I'll define. Double candlestick pattern is a bullish engulfing. Three candlestick pattern is a morning star. So let me define one by one. Single candlestick pattern hammer should appear at the end of a bearish run, and it has the potential to change that bearish run to at least a consolidation or a bullish start. So what is a hammer? Hammer looks like actually a hammer, as the name indicates, and the wick and the bottom wick must be greater than twice the body length. So if the body is X, the bottom wick here so must be greater than or equal to 2x. Then only it will be a hammer. If it is 1x, people say it is a hammer, you say no. If it is 1.5x, you say no. If it is 2x or more, then you say yes. Okay. Now, two candlesticks, bullish engulfing. Bullish engulfing is that kind of pattern in which the second candlestick, of course, this has to appear at the end of the bearish run. So the second candlestick body has to engulf the first candlestick body completely. So that is an engulfing, bullish engulfing. This is extremely powerful. If the second candlestick body is engulfing the first candlestick wicks also, that is more stronger. Now the third one is a morning star. If probably now you have identified the last two candlesticks are engulfing, it may not be always in a morning star. So in a morning star, what we see, not in FX but in commodities or stocks, you can see the second candle gaps down the first candle and the third candle gaps up from the second candle. So it looks like a morning star. The most important part is whether the gap is there or not. That is all right, because in FX market, which is 24/5, there is no gap as such. But this one here, the most important part is the close of this third candle has to be more than half of the first candle. So that is morning star. So these are the way in which you need to define. So let me help you to define the bearish candlestick patterns. Was a hanging man or inverted hammer or a dark cloud. Inverted hammer is just the opposite of the hammer what you saw, but it should appear at the end of a bullish run. Second, two candlestick dark cloud cover can be extremely important, or a bearish engulfing. The difference between bearish engulfing, as you can see, engulfing has to engulf the entire body, but the dark cloud cover, the close of the second candle has to be beyond the midpoint of the first candle. So these two are extremely powerful. The third one is exactly similar to the morning star but upside down. So I already told you, and that is known as evening star. Okay. Now I'll show you some examples in live chart, in past and present, from bullish candlestick reversal patterns like hammer, engulfing, morning star, piercing, harami. The most important you need to remember is all this reversal must be seen with a context. If there is no context, there is no candlestick. This context can be demand, supply, or sweet spot of Fibonacci. Okay. So let's go to show you something. So I'll show you this one here. This is a hammer here in front of you on August 23rd is a hammer because the low of this low wick or the lower shadow is twice the body. And this, the context here, the most important part is if I draw a Fibonacci from this point to this point, this hammer is exactly appearing at the 50% of the Fibonacci level. All right. So this hammer itself has moved the market from this to there roughly 1441 pips. Similarly, this one is a bullish engulfing. As you can see, the body, the green body has engulfed the red body. All right. So these are two examples, and this one has moved the market almost to 843 pips. And if you see if you ask yourself, what is the context of this bullish engulfing? This is the 78.6 Fibonacci from here to there. Okay. So these are two examples. Let me show you another two. So this is a morning star example. This is a morning star example, as you can see, exactly as I demonstrated in the PowerPoint. This morning star again is appearing at the 78.6 Fibonacci level. I hope you can see this. When I draw the Fibonacci from here to here, this morning star is appearing at 78.6, and you can see the close has penetrated beyond the middle point. So that is another example. Okay. So let me show you the last one in piercing. This is a piercing. The difference between piercing and harami is a small candle within the first candle. The second one is a small one. This is also within the first candle, but the close of the second candle has penetrated beyond the first candle middle point. So this is opposite to dark cloud cover. Okay. Now DZ is asking, what is your preferred time frame for analysis technically? I generally prefer weekly and then go to the daily. So let me show you some examples in daily charts or 24 hours chart. This I'll show you sometime later on, but first let me show you daily. So let's make it daily, or let's make it 24 hours, which is equal to daily. So let me show you some examples here. So this one here is a hammer. Can you see this one here? Recently happened on 2nd April on Aussie US. So this hammer should not have this much of wick, but I like this one because the shadow is twice the body, and this is appearing at the double bottom here. This is double bottom, and this is an engulfing on 12th of March at around 76 level. We had an engulfing. At the same point, we had an engulfing here on 3rd of April, and again a harami here, as you can see, on 14th of April. So this is the importance of a context. So and so let me show you some of the bearish one, like exactly opposite to bullish one, but they should appear at the long end, not at the short end. So the bearish harami is a candlestick in which the second is in the first one, very small, and if I combine these three, it will be evening star, as you can probably understand now. And this one here on February 26th was a bearish engulfing. So you can see how these are tradable by themselves. This is the power of candlesticks. Okay, so now that I have shown you the examples of bearish, engulfing, evening star, dark cloud cover, and harami, and so you giving you some concept of context, being the Fibonacci or monthly support resistance. Okay. Other candlestick reversals can be abandoned baby, kicking, concealing baby, three upside up, outside up, three white soldier, and the bearish candlesticks can be three outside down, spinning top, shooting star, black crows. Names are funny, but the important point is, how do I remember this? One point I want to mention here is you can this is easier to understand through our candlestick scanner. I will show you a quick my candlestick scanner for this. Let's go to euro. Let's bring it euro. And make it 24 hours. Probably I'll have to use this one. This one is a 24 hours chart, and I'll make this euro. Yeah. So see, two things are important, and that's how I have developed my scanner here. First thing is we need to identify whether we are in a buy zone or a sell zone. Like here, this one here from December 17 to January 26, everything is red histogram. So that by that I am telling to myself or my development through my last 15,000 hours of research and development, I know this is the selling zone and I will sell only on the bearish. So like this one here, on this one here, on this one here, and this one here, this one, and so on and so forth. Similarly on the long or the buy, similarly on this portion here, which happened again from February 26 to March 16 for Euro USD, I got another opportunity to sell, and those are the opportunity on February 26 on engulfing, and this and again here on March 19th, March 9th. Now what I'm getting, now I'm getting opportunity to in a buy zone. Now I am in a buy zone, so I bought this on bullish engulfing, and then again I bought this on this hammer. So this hammer is a context of Fibonacci 61.8. So that is the advantage of taking my candlestick scanner and identification of whether we are in a buy or a sell zone. That's what I mentioned here of the candlestick scanner. And there is a question, are those two proprietary indicators on the bottom? Yes. So those are proprietary indicators which I have developed here. But the most important thing is, as I told you, I will help you to identify yourself. And I remember when I started all these things 10 years back, I used to write down in Excel and then in Word. As you can see, these are filtered. That means these are developed in Excel. I did myself. And what it is telling me is the type of candlestick, whether it is a name. First of all, it is a name of the candlestick, then the type, whether it is a reversal or a continuation, and then the relevant, whether it is a bearish or a bullish, as you can see, and what should be the prior trend, uptrend or a downtrend. What is the reliability? Like high, upside gap to growth is very high, and then is the confirmation required? I say suggested, and then I draw some kind of this and define it. You have to define it mathematically, like this one here in front of you, gaps between first and second and first and third, black engulfing between second and third. So the combination is white, black, black, because here I have not colored them as red and green. Similarly, if I have to show you the other side, like the continuation, let me go and show you the continuation. So the examples of bullish continuation can be done through side by side white line, rising three methods, mat hold, upside. Knowing them is one thing, that is power, but the most important power is application. So as I am showing you, how do you apply your knowledge which you are learning now to identify these continuation patterns? Again, I will show you the process. What you have to do, you have to develop yourself or take advantage of our 2 days course which I run on candlesticks. Candlesticks is a very vast subject. I'm trying my best to give you as much as possible in the 1 hour 45-minute session, but it is a very vast subject because it is a standalone subject. You can trade candlesticks alone. You don't have to do anything else, and you study candlestick and you can trade candlesticks for the rest of your life. So it is a very vast subject. For that, what I have done, I've developed a 2 days course. For those of you who are interested, you can contact me. I'll give you all the details, or you can go through the scanner which I have developed. Again, I'll show you the give you the details. Like this one in front of you, side by side white line. What is that? I generally prefer candlestick patterns in which the reliability is higher, like this one. Rising three method is a high reliability candlesticks, and in which confirmation is also not required. Also, reliability can be medium, like this side by side white line, or high like mat hold, but the confirmation is not required. So this combination of high and confirmation not required, or medium reliability and confirmation not required, can be of much interest to me. And then in that case, I have to define mathematically how my software should pick this. So this is one of my favorite rising three methods and mat hold, as you can see in front of you. Any question? Well, good. You're getting it good. Now I'll show you identifying support and resistance through. Thank you. Thank you for telling everything. Yeah, that's good. Very good. So identifying support and resistance through candlesticks. We need to first mark the high or low of a bearish or bullish candlestick reversal pattern as a potential resistance or support respectively. So what I'm telling by this, what I'm saying is, you need to first, when it happens, you need to be cautious and then draw a line. For example, let me show you one example. Okay, first complete this slide and then I'll show you. DZB is asking, do you consider trend lines on which the candles are formed for final confirmation? I will show you. That's a very good question, and I'll respond to that when I'm in the chart. Okay, so please allow me 1 minute to finish this page number 17, and then I'll go to the chart. Then we need to extend this line of support and resistance into the future, because the future is unknown, and we'll be glad that we have drawn that. And wait to see if there is a candlestick reversal signal taking place at the same sweet spot. This waiting, the patience, is extremely important. Very, very, very important. Like, for example, the low of a hammer can be considered as a support to put our stop loss while considering a long position. Yeah, and gaps can act very effective support and resistance. All right, let me show you something. This is Aussie EVS. So what you have to do, once you have seen, let me go back a little bit and do one by one. For example, like we were on this date, which is February 26th, couple of months back, and we saw an engulfing. And when we are going short, because this market primarily was going short from here to there, and then it retraced back maybe 38 point or 50%, and then we saw an engulfing. So what we do, we go here for short because there's an engulfing, but at the same time I draw a line on the top of the engulfing. See, can you see this line here? Why I draw that line? Because I don't know the future. But if I see a candlestick pattern appearing here, I will again short it. Let's see. And again, I saw a kind of engulfing here in the bullish. So if we are running a short trade from this, we must get out at this point with 100 pips profit, because we saw a reversal signal here on the engulfing. Now again, this is not a good hammer, but I can consider this low as can be a possible support. Okay, so I have one resistance line at the top and I have drawn one support line at the bottom. Let's see how price is playing out. So now I am seeing a bearish harami, which is appearing exactly at the previous line which I have drawn from this bearish engulfing. Let's see whether this bearish harami is turning into a evening star. Yes, so this has turned in itself in evening star. So we will sell the market again from this point. Okay, so let's see what happens. We show the market. Again, we saw a hammer which was coming exactly the line which we have drawn. So if we have entered here with a short position for a stop loss of 108 pips, we can get out here with 229 pips. Okay, so that's 2%. And now we consider this going long because we have a context of a double bottom, and let's see what happens. So again, this is an engulfing, and we went long, and we survived here because our stop loss is here. Again, we got a same point. See the magic here, same point we got an bullish harami. Okay, so this is how to take benefit of our support and resistance. Hope you understood. Any question? So this trend line can be. I prefer horizontal lines compared to trend lines, but yes, trend lines can be meaningful provided you know the correct way to know the trend lines. Okay. Putting the profit target, it can be previous support resistance as I showed you for Aussie dollar, created by candlestick wicks, maybe engulfing, maybe hammer. Need to see the reversal before booking profit. This is extremely important. I will just not close my trade just like that unless and until I see a reversal here. Okay? Previous support created by candlestick wicks for a short sell position, need to see again the reversal before booking a profit. Another way to put the target is equidistance. For example, Euro Aussie. Let's go to show you some examples on that. So let me go to Euro Aussie for that moment. It is loading. Yep. So this is Euro Aussie in front of you. And these are my buy and sell zone from my identification of the market. Again, what happened is since I am in a buy zone here, as you can see, let me go to that point exactly to make this one here. Till this point, if I think when I saw this swing high and that swing high, this is a swing high and that is a swing high, I joined this, and when I saw the swing low, I joined it. Then this is a swing low and that is a swing low. So I joined the swing low to the swing low and swing high to the swing high, and I saw a formation, and it was a bullish formation called wedge, bullish wedge, and I am in my buy zone. So what I have to do, I can take the candlestick scanner, like here, this one here I'll go long. This is a mixed signal, I'll not go, but this one here I'll buy on this. This is one portion, so I'll buy on this, and the second one is I'll wait for this break of this wedge. So this is the break of this wedge. What I do then, I measure this from here to here, I project it from there to there. Let's see what happens. So we are long, we hit the target one time, and we have already joined a line here, line of resistance. So we can try to see whether the price is going up to that point so that we can get our double the target. So we exactly got here, and the magic is on the same line of resistance we saw a bearish engulfing here between these two, and this is the black one telling us that is a bearish engulfing. All right, price went down after that. Okay, so this is the way in which we can put our profit targets as well. Now, challenges in candlesticks. First challenge can be wrong identification of candlesticks. Okay, there is a question. Do you also consider Fibonacci and pivot points in your analysis? Yes. Answer is yes. They are very, very, very powerful. And the next question is, can we go 5 minutes over as start late? Okay, that's all right. I think we can 5 minutes is all right, I think. All right. So now let's go. Thank you for all your questions. That's brilliant. You probably have seen me drawing my Fibonacci many times. Yeah, everywhere I try to draw like this one here is a 50% here. Wherever I see an opportunity like this one here is a 61.8 here. So whenever I see an opportunity to draw Fibonacci correctly, I will try to draw that. Yeah. So, but pivot points also are extremely important. Good question. So wrong identification of candlestick reversal patterns. So let me show you some examples of a wrong identification. Let's go to ASX. Yeah. All right. Now, if you see, this is Australia 200 CAS index. Yeah. So if you're observing or trading this market from February 12th this year till date, as we speak, this instrument is dancing between two extremes of 252 pips. So what we are seeing at the bottom, we are seeing here Harami, we are seeing almost a hammer, a back-to-back hammer, and then we are buying this instrument, and we are seeing an bearish Harami and evening star bearish Harami, and we are selling. But those of you who are probably do not know, or at least starting, can have a false signal like this one here can appear as a piercing. This one here can appear as a dark cloud cover. But we need to remember the dark cloud cover has to appear at the top, not at the bottom. Similarly, this piercing has to appear at the bottom of the run or the end of the bearish run, not at the top. Definitely not at a resistance where I have drawn this resistance and support. So there are 3 supports for this instrument and there are 2 resistances. Yeah. So and then we'll probably wait for this break. But for the time being, what I'm telling you that this is a false signal. Do not buy at a resistance. This is a false signal because we do not sell at a support. Any question? This is extremely important to understand. Context and false signal. So the question here is FX Trade is asking, are candlestick patterns only effective on larger time frames like daily, weekly? My perspective, because if you have to reduce the noise, then yes. Otherwise, I think you can work on 4 hours. 1 hour can be really noisy, but 4 hour is fine, I think. Like this one is a Harami here, this one is engulfing here, and the second engulfing is appearing exactly at the point of this doji. Doji means indecision, and this engulfing appeared at the indecision point. Yep. Similarly, this one here is an engulfing. This one here is a Harami, this one here is an engulfing, and all the 3 are appearing with the context of this first one. So this is the beauty of knowing a context, but that's a good one, very good one, very good question. Next question is from Danny. Do you have an ebook with your candlestick rules? I run a 2-day course on candlesticks, and we have the scanner. So I will show you how to get those. And the next challenge can be fear of missing out. Fear of missing out is not only a candlestick problem, it is a psychological problem and anatomy of trading. If I get some time whenever I can, probably I'll talk about biology of trading or anatomy of trading, how we as human being can get in sync with trading and how it can be actually placed in our subconscious mind, which operates 95% in our 24-hour and which is million times powerful than our conscious mind. So that is another subject itself. So FOMO is one of them. The third one can be a candlestick signal even after confirmation with context may not be enough reason for a trade, we must always consider reward to risk. I never take a trade if the reward to risk ratio is less than 1. So bullish candlestick signal, as I showed you, never buy a resistance. I never sell at a support unless and until I see a break. Okay. So conclusion, candlestick wicks play an important role in identifying stop loss position. As I showed you, candlestick body represent the real force, like Marubazu, like on the engulfing. Yeah. But the point is end of a tradable move. It should appear context, context, context. Single or multiple candlestick reversal signals must be confirmed with respect to all important context. If there is no context, there is no candlestick, Matt. That's for sure. Gaps created between candlestick wicks can form a formidable zone of support and resistance. Yep. So moving forward, if you are interested to know how we trade candlestick pattern, please click on this one, the link. Here what I will do, I'll try to copy this link and then send it to you through chat. To know how we take advantage of professional side of trading candlesticks, please we need to click on this. Or if you would like to join the opportunity and hear me out, open up my trading knowledge base, please click on this. There is a special event on 29th of April. If you want to be mentored in your trading journey via our 12-month program to experience our proprietary trading edge, then do not hesitate to contact us here. So what I'll do, I will copy this one by one, and you need to tell me whether you are getting it or not. So this is the first one I have sent you. Please tell me whether you got it or not. And then the second one, got it? Yeah, thank you very much. This is the second one. And the special event is this. This is the third one. Yep. Fantastic. Now competition, if you want to participate in the competition, you must provide your understanding and interpretation of how to trade candlestick, which we discussed. Price is 1 hour session with me. Submit into this link, which I will copy paste again. So this is the competition link here I have posted. Okay, and then probably at the end we can help you to develop your own system if you are still there. And this is my details. This is my email and telephone number. I hope you have enjoyed the webinar. I hope I have added some value onto your understanding of candlesticks. And if you have any further question, do not hesitate to contact me. This is my email address, which I have sent you. And last webinar, last competition winner is Mark Talian. Congratulations, Mark. And I give you a big thank you, and I wish you all the best in your trading career. Thank you. Bye for now. Thank you, Efek. Thank you, Justinus. Justinus, very, very, very good introduction to Canada. Thanks. Good luck. Thank you very much.